Hey, Ryan Reynolds here from Mint Mobile. Now, I don't know if you've heard, but Mint's premium wireless is $15 a month. But I'd like to offer one other perk. We have no stores. That means no small talk. Crazy weather we're having. No, it's not. It's just weather. It is an introvert's dream. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, $15 per month equivalent required. New customer offer first 3 months only. Then full price plan options available. Taxes and fees extra. See mintmobile.com.
Are you noticing your car insurance rate creep up even without tickets or claims? You're not alone. That's why there's Jerry, your proactive insurance assistant. Jerry handles the legwork by comparing quotes side by side from over 50 top insurers, so you can confidently hit buy. No spam calls, no hidden fees. Jerry even tracks rates and alerts you when it's best to shop. Drivers who save with Jerry could save over $1,300 a year. Don't settle for higher rates. Download the Jerry app or visit jerry.ai/ACAST today.
Good morning and welcome to the General Motors Company third quarter 2025 earnings conference call. I would now like to turn the conference over to Ashish Kohli, GM's Vice President of Investor Relations.
Thanks, Amanda, and good morning, everyone. Joining us today are Mary Barra, GM's Chair and CEO, along with Paul Jacobson, GM's Executive Vice President and CFO. Susan Sheffield, President and CEO of GM Financial, will also be joining us for the Q&A portion of the call. On today's call, management will make forward-looking statements about our expectations. These statements are subject to risks and uncertainties that could cause our actual results to differ materially. These risks and uncertainties include the factors identified in our filings with the SEC. Please review the Safe Harbor statement on the first page of our presentation, as the content of our call will be governed by this language.
During the opening remarks, all participants will be in a listen-only mode.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host, and I am recording on this very spooky evening. I'm recording on the actual day that this podcast is supposed to be released, October 31st, which is a Friday, which is amazing that I'm even recording on the day that I'm supposed to be recording on. Miracles never cease to amaze me. Also, it must be a Halloween miracle that I'm able to do this and get it out, which is, probably miracles mean sacrificing sleep, I think, sometimes. Anyway, we have GM's Q3 2025 earnings call. And in this episode, it's not going to be as long as Tesla's, and I'm not going to get as worked up as I did in Tesla's earnings call. There was a lot of financial stuff in this earnings call, which is rude to do for an earnings call because it makes my job a little bit more difficult to find the interesting stuff. But we're going to start off with Mary Barra's open remarks, and then we'll get into analysts' questions. So let's start off with part one of Mary's opening remarks.
I want to begin by recognizing the dedication and hard work of our entire GM team, including our employees, dealers, and suppliers. Their agility in helping navigate a rapidly changing regulatory and policy environment while keeping our customers at the center has been outstanding. Thanks to their efforts and our leading portfolio of vehicles, we delivered another very strong quarter of earnings and free cash flow. In the U.S., we achieved our highest third-quarter market share since 2017 with strong margins, and our restructured China business was profitable once again. Based on our performance, I'm pleased to share that we are raising our full-year guidance. I also want to thank the President and his team for the important tariff updates they made on Friday. The MSRP offset program will help make U.S.-produced vehicles more competitive over the next 5 years, and GM is well-positioned as we invest to increase our already significant domestic sourcing and manufacturing footprint. We appreciate the administration's ongoing support for American innovation and jobs, and we look forward to progress on trade deals with countries like Canada and Mexico. As trade policies have evolved, we have acted with urgency and discipline to strengthen GM's position. Earlier this year, we announced $4 billion in capital investments to onshore production at plants in Tennessee, Kansas, and Michigan over the next 2 years. Today, I'm happy to share that we have decided to more than double the planned Chevrolet Equinox production at our Fairfax assembly plant in Kansas, above and beyond what we announced earlier this year. Once these investments come online, we plan to produce more than 2 million vehicles per year in the United States. We are also investing close to $1 billion to build a new generation of advanced, fuel-efficient V8 engines in New York. Importantly, we are maintaining our capital discipline while addressing this production and creating new jobs in the United States. We are also monitoring the supply of certain chips from China. This is an industry issue I know you are all aware of. While this has the potential to impact production, we have teams working around the clock with our supply chain partners to minimize possible disruptions. The situation is very fluid, and we will provide updates throughout the quarter as appropriate.
All right, just a quick recap here. $4 billion in capital investments in the U.S. They're going to do $2 billion to build a fuel-efficient V8 engine. There's a lot of talk of EVs being GM's North Star in this earnings call, but then there's also a lot of talk of bringing back ICE cars, which is to be expected. And then she mentioned chips from China, and I'll just say trade war, gonna trade war. Right? We'll see how that goes. There was a meeting between President Trump and Xi Jinping, and who knows how productive that will actually end up being, just because of the capricious nature of both of those two folks. So fingers crossed. All right, next up, we're going to hear about some regulatory stuff, and this is more EV focused.
On the regulatory side, our portfolio and capacity plans over the last several years had been heavily influenced by steadily increasing stringency requirements for fuel economy and emissions. To meet these requirements, we were working aggressively to install and scale EV capacity. Now, with an evolving regulatory framework and the end of the federal consumer incentives, it's clear that near-term EV adoption will be much lower than planned. This is resulting in higher variable costs as we expect to utilize less capacity across our EV plants and supply chain. All of this drove our decision to transition Orion Assembly from EV to ICE production and to sell our joint venture-owned cell plant in Michigan to LG Energy Solution. It's also why we recorded a $1.6 billion special item charge in the third quarter. $1.2 billion of the charge is for non-cash impairments, most of which are related to the Orion transition, reductions in battery module assembly capacity, our decision to stop development of next-generation hydrogen fuel cells, and the write-off of CAFE credits and associated liabilities. The remaining $0.4 billion is for cash charges related to supplier contract cancellation costs. Our retail product portfolio is unchanged. We will continue to build award-winning products like the Chevrolet Equinox EV and the Cadillac Escalade IQ, which have been very successful with customers. We're proud of them, and we believe their performance will improve, even in a smaller market. However, we have decided to stop BrightDrop production at CAMI Assembly and assess the site for future opportunities. This is not a decision we made lightly because of the impact on our employees. However, the commercial electric van market has been developing much slower than expected, and changes to the regulatory framework and fleet incentives have made the business even more challenging. Our actions on BrightDrop and our ongoing work to reset our capacity will cause us to recognize a charge in the fourth quarter. By acting swiftly and decisively to address overcapacity, we expect to reduce EV losses in 2026 and beyond, making us much better positioned as demand stabilizes. EVs remain our North Star, so we will continue to invest in new battery chemistries like LMR, new form factors, and other architectural improvements to drive improved profitability. I'm equally confident in our ICE strategy. It is clear that ICE volumes will remain higher for longer. We lead the industry today, and we are increasingly well-positioned to meet strong, sustained demand. For example, we are onshoring production of the Chevrolet Blazer, developing a next-generation Cadillac CT5, and redesigning and extending the Cadillac XT5. And when Orion Assembly comes back online in early 2027, it will produce the Cadillac Escalade and then add our next generation of full-size light-duty pickup trucks. Looking ahead, our top priority as a leadership team remains returning North America to our historical 8 to 10% EBIT margins. To do this, we will continue to drive EV profitability improvements, maintain our overall production, pricing, and incentive discipline, manage our fixed costs, and further reduce our tariff exposure net of our self-help initiatives. In addition, cross-functional teams are attacking our warranty expense by addressing the root cause inside GM, at our suppliers, and at our dealerships.
All right. The main thing here is they're decreasing EV capacity. Their plan is to build to demand, to build to customer demand. So they're not going to have, they're not going to build 10,000 cars when they think they're only going to sell 2,000 cars. And that's actually quite smart. And you should always pretty much be building to whatever you think customer demand is. We talked a little bit about them stopping the Bright Drop commercial electric van, basically ceasing production on that. That particular vehicle sold around 7,500 vehicles total since 2022. So not a lot, but about 4,000 of those vehicles were sold in 2025. So while it wasn't going as fast as GM would have liked it, wasn't selling as fast as GM would have liked it, it was starting to pick up. But when Rivian kind of started selling their van to anybody who wanted to buy one, I think that probably kind of hurt GM a little bit, and it really wasn't worth their time to continue the Bright Drop vans, which I thought looked a little bit weird. I think the Rivian vans look nicer, but I did see, I think it was a Bright Drop van that was in the UPS brown, and that didn't look bad. But I've seen Bright Drop vans in, at least I think they're Bright Drop vans in for Walmart delivery vehicles, and I wasn't a fan of the way that paint job and the shape of that car looked. But the UPS looked okay. Again, I might have been mistaken, and it wasn't a Bright Drop van. But how many electric vans are out there? Not many. All right, next up, we're going to hear about software and services from Mary.
We are also executing plans to grow software and services like OnStar and Super Cruise to generate even greater revenue during and after each vehicle sale. So far this year, we have recognized nearly $2 billion in revenue from OnStar, Super Cruise, and other software services, and our deferred revenue was up 14% from Q2 to almost $5 billion. That's off a base of 11 million OnStar subscribers, which is up 34% year over year. This includes more than 500,000 Super Cruise customers, which nearly doubled year over year. We expect robust double-digit revenue growth through the end of the decade with gross margins of about 70%. We also continue to make great strides in our autonomous strategy and in the development of our next-generation software-defined vehicle platform. It will be transformational because we will be able to evolve the software layer of each vehicle independently from the hardware-defined physical layer. For customers, their vehicles will become smarter, more capable, and more personalized over time. Our platforms will be more stable and last longer. We will see large reductions in complexity, and we will create new revenue streams from features and services. This work is exciting and full of opportunity, and we're hosting a media event in New York tomorrow to hear from the leaders who are executing our technology strategy. We will share more on these and other initiatives with you as we go forward because great vehicles, innovative technology, a rewarding customer experience, along with strong financial results, will continue to set GM apart in an increasingly competitive landscape.
So GM Super Cruise, OnStar, and their, whatever infotainment package, I can't remember what they're calling it, that has netted them about $2 billion this year, which is, by my estimation, a lot of money. I don't know if GM is seeing this as a success, but I think $2 billion in software and services is pretty good from a car company. I did look up like 500,000 Super Cruise customers. That's very impressive. But I do want to add a little bit of context to that. First, we learned that Tesla probably has somewhere around 900,000, maybe even 1 million FSD sales. We don't know if those sales actually include subscriptions or just the $8,000 that Tesla charges for the software package. But GM who's been doing this less time in terms of the autonomous vehicle stuff, has 500,000. But I think it's worth mentioning that GM gives new owners about 3 years of Super Cruise for free. So that's to the start. I don't know if that's included in the 500,000 cars. I would guess it is, but that already skews the numbers a little bit. This is the part I like the most, though. After those 3 years, I like 3 free years of Super Cruise, don't get me wrong. But after your 3 free years are up, it costs $25 to $40, depending on which vehicle you have, a month to keep Super Cruise going. And I think that's the correct price point, honestly. I think Tesla could learn a little bit from that. Like if Tesla came out tomorrow and said, hey, you can get FSD for your car for $40 a month, I would do that in a heartbeat. Also, I was thinking about this today. This is a Tesla thing, so I'm kind of getting off topic a little bit. But don't you think that since we're not going to get full autonomy with level 3 hardware, don't you think Tesla should reduce that price down to something that's more manageable? Since if you pay $8,000, you might not get it. Now I know they could probably upgrade the hardware, but it's not quite the same thing. I think there should be a discount.
Are you noticing your car insurance rate creep up even without tickets or claims? You're not alone. That's why there's Jerry, your proactive insurance assistant. Jerry handles the legwork by comparing quotes side by side from over 50 top insurers, so you can confidently hit buy. No spam calls, no hidden fees. Jerry even tracks rates and alerts you when it's best to shop. Drivers who save with Jerry could save over $1,300 a year. Don't settle for higher rates. Download the Jerry app or visit jerry.ai/ACAST today.
Hey, Ryan Reynolds here from Mint Mobile. Now, I don't know if you've heard, but Mint's premium wireless is $15 a month. But I'd like to offer one other perk. We have no stores. That means no small talk. Crazy weather we're having. No, it's not. It's just weather. It is an introvert's dream. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, $15 per month equivalent required. New customer offer first 3 months only, then full price plan options available. Taxes and fees extra. See mintmobile.com.
Hi, this is Joe from Vanta. In today's digital world, compliance regulations are changing constantly, and earning customer trust has never mattered more. Vanta helps companies get compliant fast and stay secure with the most advanced AI, automation, and continuous monitoring out there. So whether you're a startup going for your first SOC 2 or ISO 27001, or a growing enterprise managing vendor risk, Vanta makes it quick, easy, and scalable. And I'm not just saying that because I work here. Get started at Vanta.com.
This episode is brought to you by Capital One. Capital One's tech team isn't just talking about multi-agentic AI. They already deployed one. It's called Chat Concierge, and it's simplifying car shopping. Using self-reflection and layered reasoning with live API checks, it doesn't just help buyers find a car they love. It helps schedule a test drive, get pre-approved for financing, and estimate trade-in value. Advanced, intuitive, and deployed. That's how they stack. That's technology at Capital One.
Okie doke. Let's go ahead and jump into our first analyst question.
Our next question comes from Itay Michaeli with TD Cowen. Your line is open.
Great. Thank you. Good morning, everyone, and congrats. Just the first question on just the shifting emissions regulations. I'm just curious if you could talk about the extent of which over the next few years it could allow you to sell, more ICE full-size pickups and SUVs. As we think about, Orient capacity, should we think about that as effectively incremental volume growth opportunity for GM, or is it sort of, to some degree, just a tariff mitigation from Solal?
Well, Itay, thanks. And as we look at shifting emission regulation, first, all the signals are going to be less. We've already seen some of it change. We are waiting. I think it'll be early into next year where it's finalized. But anticipating that we're going to be able to sell our internal combustion engine vehicles for longer, there's a couple triggers. First, as we announced that the installing Equinox into Fairfax, we have unmet demand from an Equinox perspective. So that's one upside. The second is around full-size trucks. And right now, our demand or we are supply constrained from a full-size SUV. So when Orion comes online, that's going to give us an opportunity to fully maximize really what is a franchise for GM with full-size utilities. And then with the truck, some of it we'll be shifting more to the U.S. to from a tariff perspective, but also there could be global demand from a full-size truck perspective. So I think some of it is tariff mitigation, but there definitely is upside on some of the vehicles that have been constrained, and demand has exceeded what we've been able to build.
Okay. So I don't think that EVs are going away. I don't think that GM is giving up on EVs at all, right? But when I listened to this, all I could think about was how things have changed from their mission last year. Like I said this earlier, they keep saying that EVs are their North Star, but they're working on a new V8, but they're creating new gasoline-powered cars or ICE-powered cars. So I went to ChatGPT and I had it write a poem as if we were reading this at a funeral. So here we go. It's called The Farewell by ChatGPT. The Farewell. So here is to the vision, to the day when GM flashed all in on EV and launched full throttle. To the battery plants, the Ultium marquee, the adverts, the investor days. To the engineers who believed, to the assembly line workers who waited, and to the buyers who hoped. We say goodbye, yes, to that version of GM's EV saga. But we don't say goodbye to GM trying. Sorry, that's funny. We don't say goodbye to electrification broadly. We just say goodbye to this chapter of the story. The one of swift distribution and assured dominance by a legacy automaker. It ended not with a bang, perhaps, but a soft recalibration. May the next chapter be wiser. May the charging infrastructure strengthen. May EV adoption scale, and may GM's act, whatever shape it takes, learn from the ambition and the stumble. Rest well, big dreams. You charged up, you pulled hard, you thundered ahead, and even if you didn't crest the peak, you left tracks. Next analyst question.
And then maybe as a follow-up, Mary, it's great to see the progress on Super Cruise and software and services. Curious how you're thinking about your next generations of Super Cruise, and maybe if you can also talk about where you are in the journey to personal AVs with the Cruise team. Just love to get maybe an update on how you're thinking about the roadmap there.
Sure. Well, I'm really pleased when we look at what we're continuing almost with every quarter. Super Cruise gets better. We've now done integration with Google Maps, so our vehicles can follow a planned route when Super Cruise is engaged. The Cruise team and GM are working, and we have vehicles now that are operated by trained test drivers to gain more and more insights to train the next generation of features. Also, bringing Sterling Anderson on, and in addition to his product expertise, obviously from his time at Aurora, has significant expertise in the autonomy area, and this activity is now under him. So I think you're going to see Super Cruise continue to get better and better. We also are working on our next generation software-defined vehicle that will really be a step function improvement, and I think put us at parity or potentially better than the best in the industry today. And we'll be sharing more about that on our GM Forward event. But I think that positions us well, and we're going to keep working because we do believe it's going to be very important to have personal autonomy and the PAV work. And we see Super Cruise continuing to build that we get to a full level 4 over time. So we're definitely committed from an AV perspective, but we're making progress, I would say, on driver assistance technology with Super Cruise. And we're really excited to see the adoption rates and the attach rates that we're seeing from a Super Cruise perspective.
Okay, so we're going to talk a little bit about the GM Ford event a little bit later, but it sounds like they're more committed to autonomous vehicles than they are to electric vehicles. But since we're talking about electric vehicles, let's have an EV specific question in this very financial focused earnings call.
As a follow-up, wanted to ask about EVs, and wondering, you've talked about the opportunity for improving some of the reducing some of the EV losses that you have. Maybe you could just give us a sense of what you might be assuming, or the parameters on whether it's improved, reduced overhead spend, reducing some of the EV sales, and then how do we think about the EV lineup in this environment? When, on a true economic basis, presumably most of those vehicles have had problems or challenges on a variable profit basis, how you think about the need to sell those vehicles if you don't have the regulatory requirements out there.
Well, first, we do see EVs as being our North Star. The consumer feels or indications that we have really strong EVs as we've seen our market share grow throughout this year. So we think we've got EVs people want to have. We did expect that we'll see EV sales slow in October and probably through Q4 based on the pull ahead that we saw in Q3. So it's really going to be into early next year when we're going to know what true EV demand is. But our plan is to keep the retail EVs that we have, again, because they're so strongly recognized from a leading perspective. And what we're really going to focus on is working on costs. We also are going to stay true to what we've said before, that we're going to build to consumer demand. We're not going to overbuild. We're going to maintain that discipline. We're going to maintain our discipline from an incentives. We're, about half of what the rest of the industry is from an EV incentive perspective. So that discipline, I think, is paid off. And then we're going to work on how do we improve the EV profitability. As Paul mentioned, we have several layers or levers to pull. For instance, all the work we're doing on complexity reduction, commonizing parts, having an EV platform. Once we make a change, we can work it across all of our vehicles quickly. So that's the advantage of having the dedicated EV platform. We're investing in new battery technologies, LMR, that will allow us to take cost out of the vehicle from a significant fashion. And so those are just a handful of things that we're working on to improve EV profitability as we go forward, but continue to stay in the market and have strong EVs because we do think they're the future.
And Dan, I'll just add one more thing too, because obviously the EV demand is going to be pretty choppy for the near future. We think as we come out of the 7,500 and what we've already seen in October, with some pretty significant pullback in demand. We do think that the EV market is going to stabilize from a supply standpoint. We had a number of competitors out there that really were selling EVs for whatever they could get for them because they really wanted to get the credits on the environmental side. So we do think it'll be a more stable environment. While we, have faced that competition with much more stable incentive levels in our portfolio, I think that will bode well for us in a more stable supply market as well. So, I think that vehicle quality that Mary talked about against a more stable backdrop is going to be helpful as well.
All right. So they haven't totally killed EVs, build demand, a more stable EV environment, blah, blah, blah. I kind of think I've maybe beat that drum to death over the last couple of months. Let's go ahead and take a question on supply chain.
My other question was on supply chain. I'm hoping to better understand where GM and its suppliers stand with certain aspects, including aluminum, semis, and rare earth in light of the recent events. And do you have visibility into how many weeks of stock GM and its suppliers have in some of these key areas, and how fast you might be able to bring up to additional sources of supply if necessary?
Sure. Well, I think just overarching, we've been working now for a few years to have supply chain resiliency after we, lived through COVID and the semiconductor shortage. And so, from a battery raw materials, rare earths, Paul has led the activity to, really work to, source where we can from a North America perspective. we said either onshore or ally shore, and I think those investments will continue to pay off. We saw it from a magnet perspective, and Lithium Americas, I think, is another strong investment that we've made. I think when you look at the specific situation around Novelis, we are minimally impacted. We've been able to find alternative sources, so I don't think that's going to be an issue for us. And then, as I said in the opening remarks, we are very hopeful from the China chip situation. We understand, I should say, that the governments are talking that are involved in this, and hoping that they will work through that. Though our team had jumped into action with evaluating where we had potential disruptions and what different sources we could use. So the team is working around the clock to get that done. And I don't have any specific timing to share with you, but I think that we're very hopeful this is going to get resolved in the meantime. But the team continues to work as we speak to make sure we continue to identify other sources so we keep running. And that's really common course for us in GM right now, with some of the different supply chain challenges we've seen over the last couple of years, whether it's natural disasters or other issues affecting it. So we have an incredibly strong supply chain that I'd like to recognize. And also the partnership we have with suppliers of working with us. I think this is where relationships matter, and we're going to continue to work to resolve. So I don't have any specific, and we'll keep you posted as we have clarity.
This is a good answer. Right now, the world's topsy-turvy. A lot of the supply chain for vehicles comes from China, but not all. But there are also other countries that the U.S. is, putting tariffs on that could, cause prices to rise or cause, supply chain delays, or there's just a number of different things that could possibly happen. So for an American manufacturing company to do their best to bring all of that stuff onto U.S. shores, right, that makes sense. To the best of your ability. At some point, it might not make sense because what you would pay for the product and then what you would pay with the tariff is less than bringing that to the U.S., right? So in that case, you would just eat the tariff. But yeah, good answer. And I guess also there might be some things you just can't bring to the U.S. and you just do your best. All right. Next comes from Adam Jonas. And this is Adam Jonas's last GM conference call. I'm a big fan of Adam Jonas. I think he asks good questions. That's why I'm a fan. I don't know how he is as an analyst, but for my show, if Adam Jonas asks a question, I can't think of a time that I didn't use that question. So he asks good questions. He is going to still stay at his current bank. I think it's Chase, but I can't remember. But he's going to stay with his current bank, but he's moving over to artificial intelligence and humanoid robots. So we're just going to play Adam's full question or questions. And as it turns out, again, they're good questions. Oh, I do have to say that Mary will say JV, or their JV in China. That's their joint venture, because American automakers or foreign automakers have to have a Chinese partner to manufacture automobiles in China, except for Tesla for some reason.
Mint is still $15 a month for premium wireless. And if you haven't made the switch yet, here are 15 reasons why you should. 1, it's $15 a month. 2, seriously, it's $15 a month. 3, no big contracts. 4, I use it. 5, my mom uses it. Are you playing me off? That's what's happening, right? Okay, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, $15 per month equivalent required. New customer offer first 3 months only. Then full price plan options available. Taxes and fees extra. See mintmobile.com.
Hi, this is Joe from Vanta. In today's digital world, compliance regulations are changing constantly, and earning customer trust has never mattered more. Vanta helps companies get compliant fast and stay secure with the most advanced AI, automation, and continuous monitoring out there. So whether you're a startup going for your first SOC 2 or ISO 27001, or a growing enterprise managing vendor risk, Vanta makes it quick, easy, and scalable. And I'm not just saying that because I work here. Get started at Vanta.com.
All right, now let's listen to Adam Jonas.
Our next question comes from Adam Jonas with Morgan Stanley. Your line is open.
Thanks, everybody. So, Mary, this is my last GM conference call, which is bittersweet. It's bitter for me. It might be sweet for you. But I just have to acknowledge the consistency of the team's execution through some really challenging environments. You have higher margins and higher growth than Tesla, and you trade at 6 times earnings, not 200 times earnings. So basically, you guys have been kicking butt and proving the skeptics, including at many times myself included, very, very wrong. So I just wanted to acknowledge that for the record, and bravo to the team. Mary, I got a couple questions for you. First, China. Do you see a future for Chinese OEMs participating in the U.S. market? And if so, how do you see that evolving?
Well, first, Adam, I really appreciate your comments. I couldn't be more proud of the team of not only the strategy that we've outlined, but the agility to handle all the different changes, and the execution is really paying off. And although you and I haven't always been completely aligned, I always appreciated the ability to discuss it. So I wish you well in your next assignment. As it relates to China competition, I have no control of what's going to happen from a China perspective of where they compete and where they don't. What I will tell you is General Motors is focused on making sure we have beautifully designed vehicles with the right technology at the right cost. We understand those vehicles very well from our, not only from our JV in China, but also from, the comparisons that we've done. And so we're aiming to compete. We need a level playing field. And I've been pretty vocal about that. But given a level playing field, we plan to compete and with better vehicles that customers want to have, like we're doing today.
Thanks, Mary. Just as a follow-up on autonomous vehicles, it does look like the autonomous vehicle problem, once seen as basically nearly impossible, is getting solved. It's getting solved. If you haven't been to Austin recently or SF, I know you guys get around. It's incredible. Now, you've recalibrated your autonomous efforts to focus more on the ADAS and Super Cruise and the personal autonomy side. And thanks for the disclosure of the $200 million in revenue. I'd love anything of how profitable that is would be helpful. But you are, and you did say in your comments, you're still committed to bringing a level 4 autonomy. But I think you caveated by saying to personal vehicles. I'm wondering, are you ruling out robotaxi, or is it just let's do the personal first and see where it goes? And in that vein, what milestones can we expect for 2026 on your autonomy journey? Thanks, Mary. Thanks, team.
Yeah. First of all, I am really pleased with the performance from Super Cruise today and the fact that it continues to get better. And as I said, enjoying 70%, approximate 70% margins on that business. We are focused on personal autonomy and level 4. We're not in rideshare 1.0 today. And when you look at owning the fleet and all the other aspects that go into running a robotaxi fleet, that's not our core business today. That's not where we're focused. We're focused on individual vehicles. I think we've seen, even with rideshare 1.0 today, people leverage those, but they still want to own a car, and that freedom of I can go where I want to go when I want to go. And so we think that's going to be with us for an extended period of time, but personal autonomy on those vehicles will be very important. We'll have more to share as we get into next year what our milestones are, but I can tell you the team is working aggressively. And as I said before, the software team, in partnership with the Cruise resources, along with Sterling Anderson, who joined from Aurora, I think puts us in a really strong position. So stay tuned on those 26 milestones. And like I said, there'll be a bit more that we'll be sharing tomorrow in our GM Forward Media Day. So appreciate it, Adam, and best of luck to you.
All right. So we learned a little bit about GM focusing on level 4 autonomy, mostly for personal vehicles. I want to say in the last earnings call, when they mentioned this, they said that if it was basically, I don't know if it was implied or explicitly said, but it was basically like if other companies wanted to have a robo-taxi network, they're happy to help them out with cars, but they're not going to do anything themselves. So I don't know that part of the question was new, but I think that the information on China is interesting. You had a little bit of, I can't remember if it was in this clip or another clip because I cut this up and then I listened to it again while I'm recording it. They talked a little bit about Korea and GM's partnership with Hyundai. That must have been in a different clip, but GM's making movements to try and get this whole global market thing off the ground for them. They do really well in the U.S. and then outside of the U.S. it's a little bit more of a challenge. Not to say that they're doing bad; it's just a challenge. The Forward event that they mentioned, that's already happened, and the three big takeaways from that, there were other, but the three big takeaways for this show is eyes off driving, so level 3 driving coming sometime in 2028. A new computing hardware update, which will start with the Cadillac IQ, also coming in 2028. And then, conversational AI through OnStar, which, okay, cool. Hopefully that conversational AI does something other than talk to you. You should be able to say, navigate to blah, or, turn the heat up, or whatever you need to tell it, that you should be able to have that, it should interact with the car is what I'm trying to poorly explain. All right, everybody, that is it for me today. Man, I feel very accomplished to even just record this on the day that it's supposed to be recorded. I'm going to do my best to get it out. It is now currently 10:38. So, and I got a busy day tomorrow. So we'll see if this goes out today or tomorrow. But it will be out soon. If you want to email me, it's Bodie, BODIE at 918digital.com. You can find me on X at 918digital. I am on Sora. You can just search Bodie and you'll find me on Sora too if you're on that app. And then what's the other thing? Oh, LinkedIn, Bodie Grimm. You can find me on Bodie Grimm on LinkedIn. I have 2 interviews that I'm super excited to share with you, and they are I'm recording one of them next week and the other the week after that. So I have high hopes that all this is going to go through, which is why I'm talking about it. And then I need to plan the Thanksgiving extravaganza. So Allison and Steve, expect an email from me soon, because if I don't plan it now, it's not going to happen. It'll be a Christmas extravaganza if we don't get this out soon. All right, everybody, that is it for me. Take care, and I will talk to you next week.
Well, thank you. And I want to thank everybody for joining us this morning. I want to reiterate my confidence in the strength and adaptability of our team and our vehicle portfolio, which we believe has set GM up for long-term success. Our immediate priorities are clear. We are committed to restoring North America to our historical margin levels and accelerating the expansion of our software and services business on top of great vehicles. We also see significant new opportunities ahead. Our investments in advanced technologies, manufacturing, and talent are creating a more resilient, innovative GM capable of leading through change and delivering strong results for our shareholders. So in closing, I'd like to thank our employees, dealers, suppliers, and other partners once again for their ongoing dedication, hard work, because I believe this continues to set us apart. We're focused on building great vehicles, providing an exceptional customer experience, and creating lasting value for all of our stakeholders. And I look forward to updating you on our progress in the quarters ahead. Before I close, I would like to recognize, though, the tremendous progress our Cadillac Formula One team has been making. We're rapidly approaching a historic moment for our company and the sport. In March of 2026, Cadillac will become the first American car brand on the F1 grid at the season opener in Australia and will race for the first time on U.S. soil in Miami in May. The recent announcement that Apple will broadcast F1 exclusively in the U.S. will put the Cadillac brand in homes of multiple audiences and help us build even stronger connections to an estimated fan base of 52 million people in the U.S. alone. And when we think about F1, it's very aligned with where the Cadillac brand is today, with all the work we've done to make it a true luxury American brand. So thank you, everyone, again. I look forward to talking to you next quarter.
Hey, it's Maya and Sim from the Girls That Invest podcast. If you are an IT or security pro, you know managing devices, identities, and applications can feel overwhelming and honestly risky. That's where Trellica by 1Password comes in. It helps conquer SaaS sprawl and shadow IT by discovering every app your team uses, managed or not. With pre-built app profiles, you can assess risk, manage access, and even optimize your software spend. Plus, it simplifies onboarding, offboarding, and compliance, all while cutting costs by eliminating unused licenses. Take the first step to better security for your team. Learn more at onepassword.com/special offer.
This episode is brought to you by Capital One. Capital One's tech team isn't just talking about multi-agentic AI. They already deployed one. It's called Chat Concierge, and it's simplifying car shopping. Using self-reflection and layered reasoning with live API checks, it doesn't just help buyers find a car they love. It helps schedule a test drive, get pre-approved for financing, and estimate trade-in value. Advanced, intuitive, and deployed. That's how they stack. That's technology at Capital One.
Fall is all about cozy comforts, but when you're prioritizing your health, it's easy to feel like you're missing out. With Hero Bread, you can enjoy all your fall favorites because they're made with Hero Bread sliced bread loaves, tortillas, bagels, dinner rolls, and more. Try their all-new Hero Noodles with 12 grams of protein and just 80 calories. You won't believe Hero Bread's options have 0 to 5 grams net carbs and are high fiber from the taste and texture. They've even got small batch drops of indulgent favorites like the popular Hero Croissant. And right now, Hero Bread is offering 10% off your order. Go to hero.co and use code FALL25 at checkout. That's FALL25 at hero.co. All figures are per serving of Hero Bread. Contains 2 to 18 grams of fat per serving. See the product nutrition panels on hero.co for more information.